Hey traders, what's going on? Jamie Setley here, SB Trade Desk Midweek Strategy Webinar. It's June 20th, 2019, and glad that waited till after FOMC yesterday to do this webinar because we've got, I think, more clarity and interesting things to talk about. The funny thing is, it's not even necessarily after FOMC yesterday. It was kind of this move started in Asia yesterday. For the most part, the big dollar move to the downside, and obviously big commodity move, crude, gold to the upside. So let's just start real quickly. We're going to look at, here, one sec, hold on. All right, sorry. We're going to start with the DXY here. So we are testing again the breakdown level from September, the trend line from September. If you remember last night's swing update, talked about we wanted to see, or I wanted to see, a drop beneath the 618, which would be 96.96. So that obviously has happened, and now we just need a full-on break to the downside of this trend line. So we've tagged it, we're above it, right? Never going to make it easy. Funny thing is right here, if you look where the low is, it's actually on daily reversal support, the close from June 7th. So believe it or not out of the woods just yet. There's that saying that, you know, there's something for everyone. In the case of the dollar and FX trading of late, it's kind of been something for no one. But that hopefully is changing, or maybe even has changed. So here we are testing this barrier. If we break here, the next level, the immediate level on the downside is going to be 95.98, call it 96. And that is going to be the 23.6 retrace. So just of the, you know, rally from February 2018. So it's the first fib retrace. And you'd also have the short-term lower parallel down there as well. All right. Again, bigger picture. Log scale. Something like this. It's kind of been what I've been thinking for a really long time, and it may actually start to happen or come to fruition with the dollar. Who just says, I can't imagine anything worse than going back in that godforsaken range. Pooja, you and I both, you know, absolutely. So let's get into the nitty gritty on FX, and we'll start with Euro. All right, so we are trading 112.87 as I speak, and that was the level. We actually overshot it a little bit, of course, but that's the level where I was thinking we might actually get some resistance. We really didn't, but we're there right now. So from here, your really bullish count, and you know, your really bullish count is going to be, this is the 1, right? 1, pullback 2, sharp pullback 2. Found support right on the 1180s, right where we were thinking. And from here, you know, this is a third wave or a C wave higher. You know, pullback support. I think there's several levels to note. I actually think I talked about 1220s yesterday. I actually think that 1260s is going to be something to pay attention to. That is, you can see all the old resistance, right? So that's your resistance throughout late April and in May. So that's kind of on my radar. I want to step back for a second though and look at some longer term Euro charts. So we all know this one, right? Basically been trading on the neckline of the the line that connects to 2015 and 2016 highs. We've been on that since August, okay? That's almost a year. So we've been on there for 10 months. And, you know, at this point, it's, you know, I know an old guy that says it's time to either shit or get off the pot. And that's where we are now. That's where we have been for a long time, but that's certainly where we are right now. But let's go to, if I look at, let's go to a weekly chart here of Euro. A little exercise here of drawing channels. So we're just going to draw a channel here. Just going to draw a simple channel, not a fork, right? Just a simple channel, okay? And okay, there we go. We'll go to a daily chart, actually. So what I thought was interesting, and you've seen me do this exercise before, right? Where you draw on your channel like really early, just to kind of get a guesstimate, if you will, on what, if there's any validity to the channel. In other words, does it cross other levels? And here's what's interesting. So if you draw this parallel, okay, let's take a parallel, let's extend this off the top. You do go off of some really important spots over here, all right? And the center line from this would be pretty close to really big pivots, right? Over here, November 2017, over here, July 2018, last year, and up here, September. Also interesting to note that a parallel slides off of these. So, you know, I wonder if we have a channel that we could work with for a really long time. And looking out at kind of, you know, clearer, longer term levels to pay attention to, you're going to be looking at, I'm bringing the other chart for this. I believe it's this one, no. It's this one, yes, all right. So here's our count with all the little waves in it. That 618, obviously huge. That's the entire retrace from the 2017 low. And the trend line off the top up here, which is going to be your really big test eventually at some point, that's going to get you close to about 115 over the next couple of weeks. And that's a big level, just, you know, horizontally. That was the May low from last year and the June low from last year, right? So if we could get up there, June, you know, basically go flat for 12 months, it'd be interesting. Now I'm kind of, you know, I'm thinking ahead here, right? But you want to be prepared. So there are levels, of course, before then, but if we also draw extensions, you get two more areas to pay attention to. So the two legs up from the bottom is going to be 1422. That's really close to the high, fourth wave high, March high, which is 1448. So that's a zone. Has mentioned 115 and eventually 115.70, which is the 1618, which also happens to be the high from January. It's the high for the year so far. Okay, so good levels to pay attention to moving forward. On the upside and on the downside, again, I'm just, you know, I'm going to watch this 1260s. I think that could be an area. If we get down there and find some support, you know, time to, you know, maybe take a shot on the long side of Euro. All right. All right, let's move into British pound. That volume reversal the other day, the 8-hour one, really nailed that turn. And from here, best bet on support, I think, is probably going to be on this line. That's the one that we actually tried to buy last week and were stopped out quickly. But you can see that's going to be pretty close to former lows over here. So this spike low here, which is 126.53. So if you get down into there, the 2650s is kind of where I'm thinking. We did trade up to and take out that 613 high, 2708. Suggested that you could get a pullback after that. We are getting a little pullback here, at least in consolidation. But then, you know, the year open 2746 is going to be the big level to watch. So, you know, if we go hourly, we are certainly getting an impulse, or may already have an impulsive rally on the upside, right? Look at a hourly close chart, right? This is the method that Elliott himself, this is how he looked at charts. He plotted hourly closes. So if you look at this, it looks pretty clear to me that you've got 5 up. So 1, 2, big 3, 4, and a 5, right? And if we are in a very strong uptrend, you know, you're not going to retrace a full 618. You probably just come back into the area of the former fourth wave, and that 38.2 is in that area, right? The entire area is actually this high, 26.74, to that low, 26.33. Okay, this could be an A, B, maybe going lower for C. If it is, you get, guess what? 2 equal legs, 26.50. So this area right here is looking awfully tasty for an entry on the long side. So let's just call it 26.50 area for, you know, potential entry in cable on the long side, right? Now I get it. There's going to be, you know, news stuff, Brexit stuff, what have you, coming out. But, you know, let's trade this market technically. We have no control over that outside, the outside news stuff. So let's just identify the levels and look to get in at those levels and place appropriate stops and see if we can catch a wave, right? If we do, then your next big upside at this point, you know, you're talking probably up towards the 2970s. Let's see what this would look like. Yeah, I mean, you're talking up near 130, right? But this, essentially, you'd be looking up at the upper channel, okay? The upper channel up here. So, you know, I said 2970 to 130. That's also the old support back here in March and April. And of course, the trend line off the highs. And then, you know, we reassess after that. But good levels to look at, I believe, in cable as well. So 2650 region is going to be a spot to pay attention to here. Okay. Moving on, let's take a look at dollar yen. Found something really interesting here last night. And what I want to do is I want to draw it in so that you can see exactly where it comes from. So it's a little different than what we've been following. But what I noticed last night was that if we draw a simple channel all the way from the October high, right, and actually use the flash crash low and extend it off of here, guess where we are? We're at the center line right now. So not only are we at the center line, but this parallel, which would be, this is your 25 line. So you kind of call this your, this is in between the 25 line and the median. This would be kind of your 37.5 line. What you're looking at here is, I mean, this is perfect. This is perfect support, perfect resistance. We're lucky enough to have gotten in a couple days ago, and I should say lucky enough, I guess it was Monday night, so Tuesday trading day, and also lucky enough to have survived a stop. But what we're looking at right here is essentially, I'm going to move this target, by the way, down to probably the 106.50, 60 area, okay? Because we're looking at symmetry here. So what we want to see is we want to see a drop all the way down to here. Now, we are at the center line, so you could consolidate back and forth for a little bit before breaking it. But remember, center lines or median lines are energy points. So when you go through them, you tend to get really sharp moves. And, you know, that's where I'd be looking to that 106.50 region. Go back here a little bit, and we could have something much bigger on our hands too. If we look at it, so we've got the short-term one here, and you can see the 786, right? The next square root level, 106.57. So this region is where we're going to be targeting. If you do get any bounce from here, you want to see resistance probably around 108. 107.94 was at 618 of this move up, and 107.98 was the FOMC high volume level as well. So we do have, you know, a good ceiling there, in my opinion. So, you know, stop is more or less break even at this point, right? We're 108.45. We're in at 108.40. So still looking towards basically another 100 pips lower. Now, here's what I wanted to get at with something that could be much bigger than we actually are thinking. Remember the longer term wave count, right? We were talking about this being big A and then little b, A, B, C, D, E. And then you've got big C underway now. Well, guess what? We broke the triangle line on, what day was that? We broke that on the May 31st. And we actually have been retesting the top side of it, or the underside of it, on this little consolidation. So while I'm saying 106.50 is an area where you're, you know, at least I'm going to want to take profit. After that, it's going to be a sell bounce market, okay? Because after that, you're looking all the way down towards the lower channel line, which is really down near 103.20, okay? So 106.50s, the low, of course, 105.18, would expect something there, and then all the way down to the 127.2 extension of this rally, and the lower parallel, which is 103.21. So things are starting to shape up in terms of bigger macro moves, and that's exciting. It's been a little bit a long time coming. See some short-term stuff here. Let's look at the volume real quick. Yeah, so we're getting little hourly volume reversals here in euro. Nothing to freak out about, right? We want to be buying weakness here, in my opinion, but doesn't mean that you just go long and go on vacation. All right, moving on. Kiwi, loving Kiwi here. We got a really good entry, of course, yesterday, pretty much on the low. It was right there, actually. Got in right there. So we did come up to a spot, and we are reacting to it, and that spot is 65.94, and that is going to be over here. So we are pulling back some. That's okay. Not sure. I have this grayed out, this channel or this fork, but if we get a little bit more of a pullback, you're probably going to want to see support on that blue line, right? So you can see all the pivots that it does cross, notably the resistance back in April, right? A little consolidation around it here. And that's going to be right around 65.60, which of course is also over here. So that's that old resistance. So let's, we're working a long Kiwi position right now, and get us a little pullback into that level. I'd like to see it hold, and if it does, then we could actually put on another layer for Kiwi longs, right? And then that way we're in a strong position to take a piece out up here around 66.30. I put the limit. I sent out a tweet last night saying to put a limit at 66.27. And I'm going to keep that regardless of, whether or not we get triggered on another long or execute another long. But that's where I'll be looking for support. Okay, so two levels to pay attention to when you determine Kiwi, right? 65.60 and 66.30. The long-term chart on Kiwi, of course. That's not it. That's Kiwi yet. Long-term chart on Kiwi. Still thinking this is a possibility, right? It's testing my patience, but it's out there. No need to really concern yourself with that right now. I do think dollar yen is probably the one that's making the most sense to me from a macro perspective. And just testing that long-term median line is really important, right? We don't have something like that on Kiwi just yet. Aussie, actually a little lagging here compared to Kiwi. We actually came up to some resistance. So the J spike that we had on, I guess that was Monday, no, that was Tuesday. We did follow through on that, which is a good sign. We're actually now back up to the, guess what, month open price. So here we are on June 20th, and Aussie is unchanged for the month for the most part. But good levels here. Near term on Aussie. Not quite as neat as Kiwi, so I'm gonna, I'll be concentrating on Kiwi for the time being until we get some clarity here on the Australian dollar, or we get a fork or something good to work with. Don't really have it yet. If you were to trade up here, trade 69.50s and then pull back, then you may be looking for support around this 69 area, which is going to be the 25 line, but it's just not there yet. So a little premature here. We did run into resistance again from the month open, 69.30, and you've got the 200 average here on the 4-hour chart. So, just kind of let Kiwi do its thing, and we will, or sorry, Aussie do its thing, and we will, pay attention to it when it perks up and yells out, "Look at me, here I am," right? The best trades are the ones that come yelling at you, come screaming at you, pounding the table with both fists saying, here I am, right? You shouldn't be looking for it too much. Easier said than done, especially when the market's been as quiet as it has been, because, that's what we're doing. We're looking to trade these markets. So at this point, hopefully we've gone from having to look, right, to the market looking for us, basically. Okay, dollar CAD, let's go there. Getting a big bounce here. Let's clean this up a little bit. I know there's a lot going on. But essentially still trading between all these parallels. I've just had a real trouble trusting it. You actually hit this morning right on the channel from the top, and get rid of this, get rid of this. And looky there. October 2018 low, same exact level, okay? So for me, I've got a zone here where I will be paying attention to resistance, and that's going to be essentially the these old lows over here. So you've got 32.50, which we're really not that far from, up to 32.92, which is the high volume level from yesterday. Yep, there it is. That's the FOMC level. You can see here on, if you can see these hourly charts, the volume charts, we actually got high volume levels in Canadian dollars, New Zealand dollars, Australian dollars, in Japanese yen. Okay, we did in pound as well. We did not in euro, interestingly. But yeah, getting a bounce here, and probably just want to pay attention to this parallel right here too, right? That's going to be towards the upper end of the range. But ultimately, what we're looking for, or what I'm thinking, is that you're going to get a move down 2 equal legs sometime in July, down into 29.70. See if these fibs line up with anything. Get the 23.6 there. That's pretty interesting. Don't really need it there because we already know it's there. But yep, want to be selling strength into that zone, in my opinion. Okay. Could there be a chance to take a little scalp long? Perhaps. Pay attention to 31.80. You might be able to squeeze 100 pips out of it up to this region. All right, so there is the FX stuff. Why don't we look at gold and crude, because those are super movers here today. All right, so gold, what a beauty this is. Nailed that support back on the 10th, and guess where we are now? Back up here at this parallel, lo and behold. So pretty simple here on gold. If you pull back, you're going to want to see. If you pull back, you're going to want to see support right on these old highs. I mean, I'd call it 1370, right? The old high is actually 1378 or so, but I'm going kind of more on a frequency of touch here. So 1367 is going to be that spot. Break up through here, and I'm actually going to bring up a little longer term chart. Okay, so here it is, long-term weekly chart. Right, broken the neckline. Again, that's support 1365, clear as day. I'm going to put an alert on that, so whenever it gets hit, if it gets hit, I know it. And your first pausing point here is probably going to be around 1434. That is the September 2013 high. And again, this is a channel of all gold prices since Bretton Woods. It's the center line of that entire channel. Okay, so this is the real deal right here. So, gun to my head, I say 1434 is where you pause for a little bit, and then you are moving higher from there, or 1434 pause, get back to 1360s, and then try to go for another run. Silver, we are right back on that long-term test line. It's pretty crazy how these really long-term levels actually play out so much better on a near-term basis, than what you'd expect. They're monthly, weekly, spanning decades and decades, but the precision with which they identify pivots is uncanny. So we're right at it right now. Moving in here to a daily chart, probably draw ourselves a channel right here. And we're right at that channel. So big spot, certainly for silver. Now let's talk about some of the concerns. So like we have some non-confirmations right now, right? Gold's obviously way up here. Gold's actually like way up here because we're at a 5-year high, and silver is nowhere near that. So we do have some divergence or non-confirmation to get through, but it's hard to argue with the that gold chart and that long-term chart and the breakout of this massive base, right? All right, let's go to a crude oil chart. So the level, we held the 618 of that move. I'll go 4-hour here. We're at a spot right now where I'd kind of expect to see a little bit of a pause, and that's going to be, again, 4-hour chart, right? 200 average. It's also the 38.2. So we've gone from 61.8 to 38.2. 38.2, of course, was also support, back on May 23rd. And, more or less resistance in February. So, don't get bullish crude right here. It's up 6% today. But yeah, looking for a pause, a pullback. Assuming we do, that zone, the one that we were thinking for potential resistance before, which obviously we just blew right through overnight, that is now going to be support, and that's going to be in the 55, 55, 75 region, okay? So you can even, this is hourly, you can see us actually pulling off a little bit right here. Heads up here, euro is getting close to that 1265 area. You're going to want to see support there, okay? Going to indices quickly. This is the long-term chart of Qs, NASDAQ, whatever, one-time extension, not quite 2, but it's the one that crosses over the highs. And let's make it 2. All right, so if we do continue a little bit higher, you got 198 and change essentially, and then the upper parallel is 206. I'll obviously be on alert for any sort of reversals. I mean, it's kind of that simple. Okay. You look at this long-term chart and it seems pretty clear that there's a big wall up here, right? A big ceiling. So your regular fork and then your channel with the extended parallels, we're all up in this region. It's not to say that we can't go a little bit higher, right? But probably in my opinion, the right thing to do is to be on alert for sharp changes of behavior, extreme sentiment, et cetera, et cetera. On that note, extreme sentiment, this is put call today. CBOE put call ratio right now is 0.748. Let's see where we close. The daily close to me is important. And, you know, if we were to close right here, it's essentially the same level we were in April. After that, you know, August of last year, both kind of periods in which we started to change behavior a bit. S&P, right? All-time high print up here. Want to note you want to be aware of this level, 299.19, because that is the 2618 extension of the rally, or of the entire range from 2000 to 2009, and the 618 was resistance for like 2 years, right, until we broke. Even the 127 was probably a level on here, wasn't it? Let's see. Yeah, even the 127, look at that. The 127 ended up being really close to all those lows from, you know, 2014, 15, and 16. So the next progression in the sequence is the 2618, and that's going to be, you know, again, 299.19. So notwithstanding what happens over the next couple of days or whatever, that's a level that if we do get to, I'd be, you know, on really big time reversal watch. All right. Do we have any questions? I've gone through all the big stuff that I wanted to, but if there are questions, please do ask. Aussie CAD if possible, says Marco. Sure thing. Yeah, CAD's interesting. Not just against, you know, dollar and whatnot, but I saw EuroCAD yesterday. A lot of these CAD crosses look like they absolutely want to fall out of bed, right? As you know, I am not a huge fan of trading these other crosses. But if I'm just looking at this technically, you know, not caring what it is, but just a chart of prices, whether it's, you know, commodity, stock, currency, doesn't matter. It's pretty darn clear to me that this is a giant shelf, and it has been since, you know, for 6 years. And a break here, I mean, you know, watch out, okay? So Marco, I know you're probably looking for something a little more short term here, but you get a close, like, you know, if you just look at this now, the week's almost done, you know, just strategy, you know, weekly breakdown, draw high over that week, okay, get a weekly closing low, which we don't have yet, but if you got one, you know, closing beneath, what's that low? 91.05. your immediate focus is on the lower channel line here, which is going to be 88.10 or so. In fact, let's draw in this and see if we had any reactions around, say, the center line or anything. And yeah, we did. It's pretty good. So you can see where we came from actually just now in April was the center line. So I would keep this channel kind of on your radar. And yeah, it's going to be a big breakdown, but my guess, you're probably going to find support around that 88.10 area. But that's where I'd be looking towards, Marco. All right, got a question here on the rupee from Pooja. How are you? This was our chart of the rupee. Here's a weekly. Pretty wild. We haven't looked at this in a long time, and yet, you know, levels are pretty solid, right? So look at that support that held. Same support here, same support here. This is back in March. We've been riding this level since March. And it's a big one because look at the action on it. Look at back towards all the way back to 2012. Or this is 2011. Look at that resistance. Look at that resistance. Support, right? And not all that precise, but you get resistance here, support here, support here. So Pooja, if we break this right here, this is a big behavior change in the rupee, right? Let's say we break that 69 level, break a 69 handle. Your focus is going to be down towards, I'd probably throw a parallel off of this, but see if we can have anything off the top. So there you go. All right, so that's it. Draw a shift fork there. That's going to be on log scale. And this is a beauty. I mean, perfect support, perfect resistance. Break that 69 handle. Your focus, Pooja, is going to be down towards the lower parallel, which, you know, depending on, you know, when it can get there, I think you're talking 66.50 at some point, right? Looking over here at these lows, this gap. So, you know, again, big caveat here. You got to break 66.50, or sorry, 69, sorry, in order to go this route, right? So what do you think there? Or Pooja, do you have any thoughts actually on the rupee here? This is a pretty good looking chart. I'm not sure the RBI would like a break of 69. Yeah, so I'm not either. But that's what I'm saying. Saying if we do break it, then watch out because it could be a quick trip down to this level. Okay. I know it's common, and yes, they do appear to be defending it. But like, let's think back to central bank interventions or central banks being in the marketplace, right, throughout history. They don't always get what they want. I mean, going back to, you know, Soros, the Bank of England, right, famous one. Obviously, the SMB and the Euro Swiss debacle. Japanese yen for years and years and years, right? There were people that told you, you know, the Japanese, they will never let it break 100. They will never let it break 100, right? If I go back to, just an example, if we go back and look at dollar yen, you know, from ages ago, they defended that 100 level like crazy. So, you know, they'll never let it break 100, never let it break 100. That was basically 100, right? Well, guess what? It broke 100 and then it went to the 70s. So, you know, they don't always get what they want. I know that's what everyone thinks, but you know, fighting a central bank, of course, I'm not saying a fight a central bank. I'm just saying trade it technically, right? Like if we do break that 69 level, something's going on. And, you know, at that point, I think it'd be a good trade to be short, even if it goes against the common wisdom or whatever of going against the RBI. Yes, hey Pooja, I hear you. Fundamentals don't support it. I'm with you on that. Again, I'm just looking at the chart and saying how beautiful the levels are and how well defined they are. That's all I'm getting at here. I'm looking at it from this lens, not saying I'm right. I'm just saying that is what I see, right? And that's, where's that famous trade what you see, right? Got time for a little bit more. Pooja says, yes, the pitchfork is beautiful. I'd rather trade the topside break. Absolutely, you know, absolutely. I'm saying that we've been in a downtrend here. So if we break 69, go with it. But yes, if you break essentially this trend line from here, you break that to the top side, by all means, take it up, because, you know, if you do that, you're probably going back to test the highs, right? That'd be back on the upper parallel and it'd be right on the highs, the 74 handle. Anything else, guys, gals? Euro yen, sure thing, Marco. Euro yen, it's a really long-term chart, really long-term chart. That's not as long-term a chart. I'm not sure what I think about this. Hold on. You can see here, I'm actually starting to get some buy warnings on euro as we got really close to that 65 level. These are, you've seen me write about the DeMark exhaustion in the 200 average thing for a little bit. You can do it on any time frame, and you can see the red dot. This is a 10-minute chart, right? But when we're entering a trend phase, as I think we are, I want to know what these signals are, when these signals occur. So like you can see, buying a dip. It's basically buying a dip after the first turn. So you got that there. You get the idea. So we're getting that right now in euro. So heads up. Be looking for a long here soon, or an entry. I'll probably send it out soon. All right, euro, yeah. Yeah, we are back in dollar story land. So I'm not sure this is going to be the best sandbox to play in. But if we just look at the channel from the 2018 high, right, got really good levels to work with here. So had that reversal the other day. We did get a good bounce, failed just shy of the center line. If I go into, say, a 4-hour chart, right, let's say that we do get a, first of all, I'm bearish dollar yen, I'm bullish euro dollar, we just went through those. But let's say that you end up getting a bigger move to the top side from here, a bigger bounce, I should say, okay? Your resistance is going to be back here, right? That's the level at which you want to trade. Other than that, I don't really see a whole lot to do here, right? I hate being in the idea of essentially making something up or forcing my opinion on the chart. I will say, however, that if price does break this parallel right here, so this is 75 line of the channel all the way back to 2018. If we break this, because that was support recently, you break below there, then you're in a world of hurt, right? Or euro yen is, I should say. And at that point, you got to be looking to new lows and simply looking to the lower parallel down here, which is going to be, you know, 117.60s at that point. So those are the two barriers to know. Essentially, the lows here you break, it's for real. But if you bounce, you want to be watching for resistance up here around 123. Okay. Anything else? All right. Well, I will wrap it up here then and get this archived for you. But finally getting some vol in FX land. It's long time coming. Hopefully this is it. This is the real deal one, right? No more fake outs. No more going into these crappy little ranges. We can at least hope for that. We'll see. Bottom line is the levels and the picture is the clearest to me it's been in a very long time. You know, following Fed yesterday, but really following the price action in Asia, right? It wasn't all on Fed. That's a good thing. You don't want to capitulate right away on an event. So, you know, it gives me hope, I guess, for a lasting change in trading conditions here in FX. All right, guys, have a great rest of your week. Only like a day and a half left of it, and a safe weekend. And I will talk to you guys later. All right, take care.